And good afternoon. My name is Randy Price. We are the Price Group, and we welcome you once again to our ongoing series of webinars, our educational events decided to help you in every facet of what is going on in your life. We talk about comfort, clarity, and confidence. And one of the things that is always a question is, what about Medicare? And so on a regular basis, we love to do these webinar specific seminars. One of our favorite people in this space is Jo Middleton, the lady with the wonderful Welsh accent. And she and her team of 4 people at her firm have been an invaluable resource to many of you. We've got some clients on the call as well as folks that are new to the Price Group. And so anyway, sit back, enjoy. Jo, always a pleasure to welcome you. You're a wealth of information, and happy for your success, and just thanks in advance for the great job that you've done for all our clients as they come to see you. Just a reminder, the fall is the busy time of her life and the people there at her agency. You can start getting more specific about 3 months. So, Jo, I guess it'd be fair to say that the upcoming summer months would be a great time for people to reach out if they had questions and whatever. But welcome, thank you, and the floor is all yours, ma'am.
Thank you so much, Randy. It is always a pleasure to work with you guys. I know you do a great job with taking care of your clients, and we are just absolutely thrilled here at Trademark Insurance Agency to be a resource for you and assist you with any of your Medicare needs. So without further ado, then let me share my screen and we'll get started with the presentation. Okay, so today's presentation obviously is called Medicare 101, and I'm really going to review with you understanding the A, the B, the C's, and the D's of Medicare and all of your different options. Before I really do that, I want to address one quick thing because we hear this all of the time in our office. If you are turning 65 within the next 6 months, you will be no stranger to having 15, 20, 30 calls a day about people asking you about helping you with your Medicare. And if that is you and you would like to stop the madness, I have an actual brochure here that can assist you in taking some steps to stop all of these people calling you. It's a trifold, so you've got a front and a back. Here's me and my agency, but this gives you some steps. So if you would like a copy of this, if you don't have it, I provided it, Randy. You can certainly, at the end, I'm going to share my contact information. You can email me or call me, and I'll gladly share that with you so that you can hopefully cut down on all of these people calling you. Okay, I know that can be really frustrating. Okay, so what I'm going to review with you today then is the actual basics of Medicare, what original Medicare is, when you should enroll, what your coverage options are once you've enrolled in original Medicare, whether you want to use original Medicare or what the heck is all of this stuff about Medicare Advantage. And then important for many of you who might be working, we're going to talk a little bit about the coordination of benefits as well and how all of that works. What is Medicare and who's eligible? Well, basically, it's health insurance for people that are 65 or older or people with certain disabilities. Your income level in terms of your eligibility has no bearing. It doesn't matter how much money you make or don't make. You become eligible when you are 65, as long as you are a U.S. citizen or a legal resident that has lived in the U.S. for at least 5 years in a row. The actual original Medicare is run by the federal government, but you can privatize it. That's where Medicare Advantage comes into play, and I'll be talking about that today. It covers most of your medical services, but there are some holes and gaps in that, and we'll talk about that too. An original Medicare began in 1965 as part of President Johnson's Great Society. We didn't get drug coverage, which is considered Part D, until 2006. And so that was under the first President Bush. That's when that actually came into play. And in 1997, that is when we actually got Medicare Advantage. It was originally called Medicare Plus Choice. So this little graphic here is just showing you what is original Medicare. Original Medicare consists of two parts, Part A and Part B. And when you have both parts, this is what your Medicare card will look like. Whoops, let's go back. It's a red, white, and blue card and have your name. It has your Medicare number, which could be a combination of numbers and letters. And when you have both parts of Medicare, you will see it'll say hospital Part A, medical Part B, and there will be dates, okay? So please, make a note of that's what it looks like. If you've got an old Medicare card that's got your social security number on it with a letter, that is an old card and you need to call Medicare to get a new one, okay? So what does Part A really cover? Part A is considered your hospital insurance, and it covers inpatient hospital stays, inpatient mental health, skilled nursing services, hospice care, as well as some blood transfusions. Medicare Part B, this is the part of Medicare we use the most. It's doctors and all outpatient visits. So physician services in and out of the hospital, outpatient hospital services, ambulance, mental health, lab services, durable medical equipment, things like wheelchairs, walkers, oxygen. I broke my foot last year. They gave me crutches and a boot to hop around on. That would be durable medical equipment. Physical therapy, occupational therapy, and some preventative care. But that's important that it is some preventative care. Medicare doesn't cover an annual physical like you're used to when you're working. So how much does Medicare cost? So in 2023, there is no cost for most people for Part A. So you can see we've got here 0 premium. But when you utilize Part A for going in the hospital, if you have no other coverage, the deductible for going in the hospital this year is $1,600. And what is strange about this deductible is it is not a calendar year deductible. It is based on a benefit period, which is up to 60 days. So really what this means is that this deductible can reoccur multiple times in a calendar year if you have multiple hospitalizations with at least 60 days in between. If you are in the hospital more than 60 days, on the 61st day, you will start paying co-insurance, which is a co-payment of $400 per day for the next 30 days. And God forbid, if you're still in the hospital after 90 days, on the 91st day, you'll be eating into your lifetime reserve days. You get a maximum of 60 of those for your lifetime. And for the privilege of using them, you would be paying $800 a day. Again, this is if you have no other insurance to cover that for you. And there's no out-of-pocket limit. So all of these numbers here keep reoccurring throughout the year. You never get done paying. Medicare Part B has a premium. We did not prepay for Part B like we did for Part A. Part A is funded by your Medicare and FICA taxes. But Part B is something that you have to pay once you activate it. If you get a Social Security check, the premium is deducted out of the check. If you do not, you will be billed on a quarterly basis. So currently in 2023, the standard base premium is $164.90 per person per month. And as it says on the chart here, this is for most people. So about 5% of the population fall into a high income earner category. Okay, I think I insure about 95% of them because a lot of my clients fall into a high income earner category. And I'll show you a chart in just a second. But anybody that is a high income earner gets to pay an income related adjustment over and above this premium if they are a high income earner. And that's the one thing that people, when they're working, often don't plan for when they are getting ready to retire. So base premium $164.90. We'll look at the chart in just a second for all of the different premiums. Once you're using Part B, you are going to have an annual deductible of $226 for Part B services. And after that deductible is met, you will pay 20% basically to infinity and beyond because there is no out-of-pocket limit. And some doctors can say, I take Medicare, but I don't take assignment. That means that they won't take the full payment, what Medicare is going to pay them. and they can charge you excess charges. So you may be liable for paying excess charges, again, depending on what other insurance you may have. So here is the chart for 2023 that illustrates how you might file your taxes, what the appropriate income brackets are, and based on those income brackets, what the Part B premium is going to be. This is based in 2023, the federal government will be looking at your 2021 tax return, because most of us have only just recently filed our 2022. Or maybe not, maybe you're going to file it in October. And so they're going to look at your modified adjusted gross income. That means your adjusted gross income plus any tax exempt interest. So in order to pay the standard premium as an individual filer, your MAGI needed to be $97,000 or less. As a joint filer, it needed to be $194,000 or less in 2021. And here you'll see the income brackets if you're higher than that, showing you what that appropriate Part B premium is going to be. If you are a high income earner and you have to become acquainted with IRMA, no, I'm not talking about IRMA's restaurant in downtown Houston. That's one of my favorites. This stands for an income related monthly adjusted amount. The federal government will charge you IRMA on Part B as in boy, as well as Part B as in drugs when you enroll in drug coverage. So the premium is paid to the insurance company, whatever it is. The premiums vary by plan. But then this is the upcharge, if you will, that you would also have to pay the government if you're a high income earner for your Part D. You can appeal this income related adjustment if you think it's based on an incorrect amount. But you need to have had a life change in order to make that change. So for example, maybe you've retired. That's considered work stoppage. That obviously is going to lower your income. That would be one of the reasons that you might file an appeal. And the appeal is done through the Social Security office. Let's talk about when you enroll in Medicare. So there are different periods of time when you can enroll in Medicare. The first period is known as your initial enrollment period, and we call that your IEP. This is when you were first eligible to enroll in Medicare, either because you're about to turn 65 or because you've been deemed disabled if you are under 65, okay? There's also a period called the General Enrollment Period, your GEP. This is a set period of time for people who didn't enroll during their initial enrollment period. And we're going to talk just a little bit about that. And then there are also a lot of special enrollment periods. And this is for people who are unable to enroll during their initial enrollment period, or maybe you chose not to. And you do need, if you meet certain requirements, you might qualify for a special enrollment period. And for example, this might be someone who worked past age 65, didn't enroll in Medicare because they were on their employer coverage. That would be considered an SEP or a special enrollment period to now begin to enroll. So your initial enrollment period begins 3 months before the month you turn 65. It runs through your birth month and then on for another 3 months after the month you turn 65. So it's a full 7-month period, okay? Even if you're collecting Social Security, you can't, you can take Social Security as early as 62, but you were never eligible for Medicare before age 65 unless you are deemed disabled, okay? So you can get Social Security early, but not Medicare early. You yourself must be 65 to enroll in Medicare. So the thing that often comes up is people say, well, my husband's 65 or my wife is 65, can I piggyback off of them? No, if you are not 65, you are not eligible for Medicare. And even if you're not collecting your Social Security, if you're going to wait and delay Social Security, you can still activate your Medicare at age 65. During this initial enrollment period, you can enroll in Part A only. You can enroll in Part B, or you can enroll in both A and B. And if you are going to use Medicare as your primary insurance, you can get to decide if you want to enroll in a Medicare Advantage plan, or if you want to enroll in a Part D prescription drug plan. This is also when you would enroll in a Medicare supplement as well, if you wanted to do that. This question comes up a lot, and I will take questions at the end, but I'm going to see if I can answer some of the ones that I know usually happen. And that is going to be, well, I am working past age 65. Do I need to enroll in Medicare? So here's the rule. If you are continuing to work with an employer that has more than 20 employees and you are not contributing to a health savings account, then we would recommend that you enroll in Part A only. If you are enrolled into contributing to an HSA, then you wouldn't enroll in Part A either, but I'm going to address that at a later slide. So more than 20 employees working where you work, not on the health insurance, don't care how many that is, it's just how many full-time employees work there. If you are working for an employer and you are a small employer, it's a small employer with more than 20 employees. So for example, here in my agency, there are 8 of us in total across all departments. We would be under 20 employees. Then you, I'm sorry, I did that the wrong way around. I'm sorry, this should say less than, I got this slide wrong, less than 20 employees. Then you would want to enroll in Medicare. So under 20 employees, Medicare is primary, and you must enroll in A and B. Over 20 employees, the insurance at work is primary, so you don't need to do anything at all, or you can enroll just in Medicare Part A. So special election periods, we talked about this in the previous slide. When you are coming off of your employer plan, you're retiring, or maybe it's open enrollment at work and you are over 65 and you don't want to be on your employer plan, you could choose to jump off at that point during the group's open enrollment period. And that's when you would then take action to enroll in Medicare so that you can be fully on Medicare, okay? When you come off of your employer coverage, you have an 8-month window to enroll in Medicare Part A or B and not be considered late. Now, obviously, I would advise that you are not going to wait 8 months, because what the heck are you going to do about coverage in the meantime? We would want you to enroll in your A and B to coincide with when your coverage at work is ending. But you do have a full 8 months before the federal government would tell you that you have a penalty for enrolling in A and B, okay? It can take Social Security a little while to process an application, so it is important to plan ahead. You don't want to decide on Monday that you're quitting on Friday and trying to get this done. So ideally, we recommend that you would start the process 60 days in advance, okay, of the date that you need to be effective. Now, that's for A and B. Part D, which is drug coverage, you can only go up to 2 months. It's actually 63 days from the time that you lose coverage without enrolling in a Part D drug plan without incurring a penalty. So you got 8 months for A and B, but you've only got 2 months to enroll in drug coverage, okay? So that is important to know. And you can switch your drug coverage during the annual enrollment period, which is what Randy was talking about. That's when I'm really busy. I'm like your CPA at tax time. Then between October 15th and December 7th, that's when everybody on Medicare can make changes to their plans. So it's particularly busy during that time. I do want to address COBRA. COBRA or any kind of retiree health plans are not considered employer health coverage for purposes of this special election. So in other words, you cannot elect COBRA when you leave work and think that you can ride out COBRA for 18 months and then go ahead and enroll in your A and B and not incur a penalty, okay? COBRA actually is not considered credible coverage for Medicare, so it's important to know that, and I'm going to talk more about COBRA as well a little bit later. And then the annual election period, which I mentioned, this is the end of the year, and it's your chance when you are on Medicare to make changes to your coverage. Lots of people think that this annual election period is when they should enroll in A and B. That's not what this is about. The annual election period is only for people who are fully on Medicare, A and B, and either on a Medicare Advantage plan or a Part D drug plan. This is their opportunity to change those plans if they want to. And any change you make will take effect on January the 1st of the following year. So, missing your enrollment period. This can have some serious costs, but it only applies to you, as it says here, if you did not have credible coverage. If you're on an employer plan with over 20 employees, please don't let anybody tell you, oh, you're going to pay a penalty because you didn't enroll in Medicare A and B. That is not true. If you're on an employer plan with more than 20 employees, you can work till you're 80 if you want, and you are not going to incur any penalties because you have credible coverage. This penalties has to do with you just were, for want of a better way of saying it, derelict on the job, and you did not apply when you should have when you turned 65, and you don't have any other coverage, okay? You are going to incur penalties at that point in time. Most people don't pay a penalty for Part A because Part A is premium free. But if you are someone who doesn't qualify for premium free because you don't have the 40 quarters, there's a 10% penalty for enrolling in that late. Again, if you did not have credible coverage. If you did not enroll in Part B and you did not have credible coverage, you will pay an additional 10% in penalties for every 12-month period that you delay, okay? And if you wait 5 years, that's a 50% penalty, and that penalty stays with you for the rest of your life. It is not a pay it once and you're done, it's every month, okay? Again, doesn't apply if you have credible coverage. And this little chart here shows you the options that you have once you've enrolled in Original Medicare. It's really important that regardless of which side of the diagram you choose to play on, the first thing you have to do is go to the Social Security website and enroll in A and B. Think of A and B as the foundation of your house. You cannot build a house on top of the dirt. You have got to put a foundation down first. And so enrolling in Medicare is your foundation. And then you decide, do I want the government to administer my Medicare? That means I'm going to use Original Medicare as my primary insurance. Do I want to buy some sort of a supplement or a Medigap? We use that term interchangeably, to help pay those out-of-pocket costs that I would be responsible for that have no cap. And then you would enroll in drug coverage so that you don't incur a penalty for drugs. So this is option number one. Or do I want to try option number two? Option number two is known in the industry as a Medicare Advantage plan, but the government calls it Part C. And you're going to see commercials on the TV that talk about Medicare Advantage and commercials that talk about Part C. Know that those two things are the same thing. It's just two names for the same kind of coverage. And basically, this is where you have paid in now for your Medicare A through working. You're paying your premium for Part B, but instead of the government administering these benefits for you, you're going to privatize it now with a private insurance company. And they are going to administer your A hospital, your B medical, and usually your B drugs all together in one handy-dandy little plan, which looks and feels a lot like what you had at work. I'm sure you've seen, lots of commercials on the TV about that, and I'm going to talk about that on another slide. So Part D is drug coverage. Up until 2006, if you took drugs on Medicare, you were responsible for the full cost. Now we have drug coverage. It's not perfect. It's a bit cumbersome in how it works because there are stages to the coverage, and how much you pay for your drugs depends on what stage of coverage you happen to be in. The plan is a one-year plan, so the benefits can change from 1 year to the next. Think of it like at work when your employer says it's open enrollment and here's the new plans we're offering you. That's when the annual election period rolls around at the end of the year, October 15th through December 7th, and you get to review your plan, see how it's changing, and see if you want to make a change. All plans have a list of drugs that they cover. That list is called a formulary, okay? And you need to be sure that your drugs are covered on the formulary before you enroll. That list can change from one year to the next, and you will never get auto-enrolled in a drug plan unless you are low income and you qualify for extra help on your drugs. That would be when the government would auto-enroll you. But for most people, they do not get auto-enrolled. You have to take steps to enroll, and you do not enroll in Part D on a government website. You either enroll in a Part D drug plan by going directly to the insurance company or through a broker like me who represents lots of different plans, and we would help you figure out which one is the right one for you. If you don't enroll in a Part D drug plan when you become eligible and you have more than a 63-day gap in coverage from when you lost your employer plan, that's when you're going to start incurring a Part D penalty. The penalty is 1% of the average Part D premium for each month that you delayed. What does that really mean? What that means is that every year the government determines what the average cost of prescription drug plans are. This year, that average cost is just around $33 a month. So basically, your 1% would be 33 cents for every month that you were late. They freeze the penalty once you enroll, but once they've calculated what the penalty is, you have to pay that penalty every month for the rest of your life. And the penalty will fluctuate from one year to the next because the average cost of a prescription drug plan varies from one year to the next. If the average cost goes up to $35, then you'll be paying 35 cents a month for every month you delay, okay? And this is how drug coverage works. There are stages to the coverage. There is a deductible that is allowed to be had at the front of the plan. The federal government tells the insurance companies what the maximum deductible can be. This year, that number is $505. Not all plans, not all drugs apply towards the deductible, but some, in some plans it is, some plans it isn't. They're allowed to make those choices, the plans themselves. And then we have what's called the initial coverage phase. In the initial coverage phase, you are going to pay a copay or co-insurance for a cost of your drug, dependent on the tier that it is in. Most plans have 5 tiers. So it might be something like tier 1 is $10, tier 2 is $20, just to give you an example. And the insurance company will pay the difference in this phase between the full cost of the drug and what you are paying in the form of co-insurance or a co-payment. When the full cost of the drugs, what you and they are paying, this year reaches $4,660. This number can change each year too, it's set by the government. That is when you would fall into what is called the coverage gap, also known as the donut hole. And in this phase, the copays fly out the window and you are responsible for 25% of the cost of every drug that you're taking. And you're going to do that until your true out-of-pocket has reached $7,400, which is then going to throw you into the final phase called catastrophic. And in this phase, you're either going to pay 5% of the cost of your drugs or a small copay based on whether it is generic or brand name. And it's the greater of the two, the copay or the 5%. And each January, this mess starts all over again. Now, we are expecting changes to this, but not until 2025, based on the last bill that President Biden passed. There was some things in there about Medicare, the Inflation Reduction Act. And one of the things says that in 2025, the maximum out-of-pocket that Medicare beneficiaries will pay on their drugs is $2,000. Now, as a result, we are going to see some sweeping changes in how drug coverage works. But stay tuned. I don't have that information yet. We haven't heard how that's going to affect it. But between now and 2025, we have, the rest of this year and next year, we're going to have these stages to coverage. And next year, the deductible and these, stop gaps go from one phase to the next. Those numbers will increase next year likely as well. Medicare supplements are private insurance plans that you buy from a private insurance company. The government often calls them Medigap plans. They do come in letters of the alphabet too, and they are standardized. So for example, Plan G right now is the most popular plan. A Plan G is a Plan G is a Plan G, whether that insurance company is United Healthcare, Physicians Mutual, Humana, Aetna. It doesn't matter the name of the insurance company. The benefits are exactly the same. There are some things to know about the insurance carriers, they're not that you might want to know before you pick a plan, but the actual coverage itself is standardized. You do have to take action to enroll in these plans. And the important thing here is to know that obviously the more comprehensive the coverage, the more the premium. And this is basically where you are paying premium on the front end to cover your out-of-pocket costs on the back end. So you are prepaying the insurance company so that when you do have a hospitalization event, etc., instead of you paying that $1,600, you've paid a premium to the insurance company and they are going to pay that $1,600 for you, which is the Part A deductible. Okay, what the actual supplement covers depends on the plan that you enroll in. But again, Plan G is the most comprehensive, it's the most popular. And the important thing to know about a Medicare supplement, two things to know. One, it can never pay primary. So if Medicare says we do not cover that procedure, the supplement is not going to cover it either. It can only pay secondary to Medicare. So Medicare has to approve the claim. And the second thing for you to know about a Medicare supplement plan is that they are not HMOs or PPOs. They are not network based. As long as your doctor or hospital accepts original Medicare, they will take any supplement you have. Okay, they don't have to be in network with the supplement carrier. This just talks about Medicare supplement open enrollment period. So Medicare supplements, because they are secondary coverage, they don't always have to take you, okay? They're not primary coverage. So when you first become eligible, which is going to be when you first activate your Medicare Part B, which could coincide with your 65th birthday, or it could be later, depending on when you activated it, you have a 6-month window where you can purchase a Medicare supplement or a Medigap plan, and you cannot be denied coverage. They cannot ask you medical questions. They cannot, exclude conditions or anything like that. And they can't charge you a higher premium for any medical conditions that you have or medications that you're taking. But that is a one-time open enrollment for that Medicare supplement, and it is a 6-month window only. And it is based on the first month that you enroll in Medicare Part B. After that period, if you want to change that supplement, you want to, get a supplement because you didn't have one previously, now you can be subject to medical underwriting, and depending on your medical history, you may not be able to buy a supplement. So Medicare Part C, Medicare Advantage plans, as I said at the top here, think Joe Namath, he's the most popular person you've seen on the TV, talking about these Medicare Advantage plans. They do include your hospital, your medical, and your drugs. You cannot have a Medicare Advantage plan and a Medicare supplement. You've got to choose one or the other. Again, these are offered by private insurance companies. But unlike supplements, these plans do not pay after Medicare. They pay instead of Medicare, and they operate under a special contract with the government. They're calendar year plans, so their plans can change every single year. And oftentimes they do offer additional benefits like vision or hearing or some wellness or a nurse phone line. The benefits vary by plan. Please understand when you see the commercials on the TV that say, are you getting everything you're entitled to under Medicare? And they are listing off all of these benefits. No Medicare Advantage plan offers all of those benefits. The insurance companies get to pick and choose which extra benefits they offer, and certain plans will have certain benefits and certain other plans will have other benefits. So don't be misled by that on the TV. In order to enroll in an Advantage plan or a Part C plan, you must have Medicare A and B. You must live in the plan service area. That could be certain counties in a state. It might be a state, just kind of depends. Your financial status doesn't affect, nor your health. Does that affect the ability to enroll in Part C? So they can't ask you any medical questions. You can see they used to be able to ask about end-stage renal disease, which is, are you on dialysis? But you see, I put a line through that. They can't even ask you about that anymore. When you transition to Medicare, it's really important to understand how Medicare works. So, common scenarios are people that are still working and they don't know, do I want to go on Medicare? Do I want to stay on my employer plan? Do I need to go on Medicare? And this is where you're definitely going to need to be asking your employer, does my plan play primary or secondary to Medicare? You also want to think about, do you already have coverage from a former employer? So, are you on some kind of a retiree benefit? You retired before age 65, or maybe you retired before 65 and you took COBRA, and now you're turning 65 and you're eligible for Medicare. How does that situation work? So each type of insurance works differently with Medicare, and it's really important that you understand how that works. You can certainly ask, a broker like me that question, but ultimately, the people that are administering the benefit, it's really their responsibility to tell you how that coverage would interface with Medicare. I can tell you, when you call, if you want to call me up, I can, you can bounce back from me what they said. The biggest thing I get a pushback on is people with employers under 20 employees telling them that they don't have to enroll in Part B. So, that I would disagree with that, but but that's usually the only one that I get pushed back on. So this is a chart from the government. Here we go. 65 currently working, fewer than 20 employees. Medicare is primary. That means you need to have A and B. Your employer plan would work secondary, like a supplement and a drug plan. Over 65, over 20 employees, the employer plan is primary. Medicare is secondary. You don't have to enroll if you don't want to at that time. If you are disabled under 65 and currently working, the magic number for who pays first is 100 employees, not 20. So if you are disabled and you are working and you have more than 100 employees, the employer plan is primary, Medicare is secondary. Fewer than 100 employees, then Medicare is primary, you must enroll in A and B, employer plan is secondary. Lots of people have health savings accounts. I have one myself. So you would have a high deductible health plan and a health savings account that perhaps either you are contributing money to, or perhaps you and your employer is contributing money to. It's very important. You are not allowed to be on any part of Medicare currently and contribute to a health savings account. So basically, even if you're working for an employer with more than 20 employees, I'm always going to ask you, tell me a little bit about your coverage. Do you have a health savings account that either you or your employer is contributing to? If the answer to that question is yes, I'm going to tell you don't enroll in Part A. If the answer to that question is no, I don't have a health savings account, then I would tell you to enroll in Part A. So very important to know that. And if you do work past age 65 and you're going to activate your Medicare later, you need to know the government will backdate your Part A up to 6 months. And that can cause some HSA tax liability. So you need to stop contributing to your HSA 6 months before you retire if you are over 65 already. COBRA is always secondary to Medicare. You're only eligible for COBRA if you work for an employer that has more than 20 employees. It's not considered credible coverage. So for example, if you are retiring and you are already 65, please don't think that you can not enroll in Medicare or enroll in COBRA while you wait, because COBRA pays secondary to Medicare, which means that you would be on the hook for everything that Medicare A and B would have paid. And yes, we have inherited clients that has happened to them because somebody gave them the wrong information. Okay, so it's important to know COBRA pays secondary to Medicare. Certainly, COBRA is a great option when you leave your employer if you are under 65, or if you have a spouse, that's on your plan that's under 65. But if you are over 65, COBRA is not a good option for you if you don't have A and B. So that's, I think, close to right on time. I usually spoke for about 40 to 45 minutes. So I leave the rest of the time for any questions that you may have. So, Randy, what kind of questions do we have out there? Any?
Let's just see here, Joe, thank you. You might tell folks where your office is while I'm looking for questions here.
Yes, of course. So my office is in the Energy Corridor. We are off of I-10 and Derry Ashford, right on St. Mary's Lane. So I'm on the south side of the freeway, off of Derry Ashford. And I've put on this, I guess I should leave the screen up so that you can see it. I've also got my contact information here. So here's my email. This is the email for my team. I'm in that email as well. So, client services at tmia.biz. If I'm, like busy doing something like I am right now, if you email my team, someone on my team would answer a question for you. And then this is the general number to the office. And that would be the number I would recommend that you call if you want to talk to me or anybody on my team. Oh, Randy, you're muted. We can't hear you.
I said, usually we have quite a few questions, but I don't see any at this time. So going once, if anybody does have a question, obviously there's Joe's contact information. We have some resources as well. I would remind you that Medicare planning is just one part of what we think is a true live well plan. Here at the Price Group, we're a little bit corny from a standpoint of everyone wants to live well. And that's exactly what we do is we sit down and holistically touch goals and objectives, cash flow, income tax planning, estate planning, insurances, and obviously the Medicare planning is a big part of that. So a couple of questions here just came up from one gentleman. I have to pay IRMA due to ongoing Roth conversions, even though I retired nearly 10 years ago. I plan to go to the third month following my 65th birthday next year to maximize company retirees insurance. You said this could take 60 days.
Okay, so I'm not sure about the last part of it. So if you say you retired nearly 10 years ago, but you're not telling me, exactly how old you are. It looks like what you're telling me is you want to enroll in your Medicare on the third month following your 65th birthday. I think that's how I'm reading that. That's fine. So just know, for example, if you are turning 65 in May, let's say, because we're in the month of May right now, the third month, that would be June, July, August. You have until August to enroll in Medicare. If you enroll in August, then your Medicare would start on September the 1st. Okay, so there used to be some different rules, but as of this year, your Medicare will always start the month after. So if you enroll in the 3 months before your 65th birthday, it starts the month of your birthday. If you enroll the month of your birthday, it starts the month after, the month after that, the month after, for example. IRMA is going to be based on your tax return from the year that they're looking at. So this year they're looking at 2021. The only way you can appeal IRMA is if you have a qualifying event that is telling them that this information is not correct. So let's just say you are retiring. I think that's what you're saying here, that you're going to retire. If that retirement is going to cause your income to be lower than the tax return that they're looking at, you have a qualifying event considered work stoppage, and you can tell them what you're predicting your income is going to be, and that will lower your IRMA. But if you're retiring and your income is not going to change, then you're going to be in that income bracket for IRMA, and the brackets change every year by the government, and the premiums for Medicare change every year. And they normally, when you're on Medicare, they send you a letter in early December telling you what your new premium is going to be. When you asked about the 60 days, the 60 days is if you've already enrolled in Medicare Part A when you turn 65, and now you are retiring and you're 67 and you need to activate Part B, that's what can take up to 60 days. not when you're in your initial election period. Although I will tell you, I've seen them take more than 30 days on the initial election period too. It just depends on how busy they are in Social Security, but they will backdate it to the date that you ask for. And Dave, you're telling me you turn 65 next year. Yeah, so if you turn 65 next year, you've got a 7-month window to enroll. If you're going to retire during that time frame, and if you're not retiring during that time frame, you can just enroll when you're ready to retire.
Perfect. Okay, Jo, as usual, you're a wealth of information. I love your accent, and again, thank you for the great job that you've done taking care of Price Group clients. Again, planning is a big deal here with our team. If it's not written down, it's not a plan. Again, holistic planning is the Price Group way, and we think that the Medicare is such an important part of that, just like Social Security planning is also. You want to make sure you don't make any mistakes, and that's why we have the subject experts on a regular basis to help folks see where they are, but more importantly, have a plan for going forward. So on behalf of the whole Price Group.
Randy, I do
yes,
see there's a couple of extra questions. Do we have time for me to answer them?
Yes, we do. There you go. I didn't scroll down. Thank you.
Yeah,
so much.
I've got the chat up now so that I can see it.
Okay.
So an anonymous person wants to know, they say, I'm turning 65 in August of 2025. What's the look back period in which income will be looked at? So in 2025, anonymous, they will be looking at your 2023 tax return. So anything you can do this year to mitigate what that income is going to be on that tax return is what is going to, afford you the ability to perhaps not pay IRMA depending on what your income is. So again, they're always 2 years behind looking at that tax return, and they do review it every year. And then another anonymous attendee wants me to tell you the difference between Plan F and Plan G for supplements, and does Plan F have more advantages than G? So Plan F was always the most comprehensive supplement available. It is only available to people that became eligible for Medicare before January the 1st of 2020. If you became eligible for Medicare after that date, Plan F is not available to you. Yes, it is more comprehensive than Plan G. Plan F covers all of the out-of-pocket costs under original Medicare. So all of the Part A deductible and co-insurance, all of the Part B deductible and co-insurance. So basically it's first dollar coverage. That's why it went away. Plan G will cover all of your out-of-pocket costs under Medicare Part A and all of your 20% under Medicare Part B, but not the Part B deductible. So this year, that's $226. And anonymous, I will tell you that I get a lot of clients that are eligible for F because they turned 65, before 2020, but they are still choosing at this point in time to enroll in a Plan G because oftentimes the difference in premium annually between F and Plan G can be more than the Part B deductible. So of course it makes sense, why do you want to pay an insurance company extra money just to not have to pay at the doctor's window? Personally, I'd rather keep the money in my own pocket than give it to an insurance company. And so Plan G in most cases is still going to be a better buy. Hopefully that answers that question for you.
Okay.
That's all
Super.
I see, Randy.
Jo, thank you so much again. Any questions, reach out to Jo. You can always reach us here at the Price Group as well.
And if anybody wants this flyer, send me an email or give me a call, give us your email address, and I'll gladly share that with you as well about how to stop all these people calling you about Medicare.
Okay. Thanks again, folks, for joining
Randy.
us. Have a great rest of the Wednesday afternoon. Jo, we'll look forward to seeing you a little bit down the road. And thanks again for all your help.
Sounds great. Thanks for the opportunity. Take care. Bye-bye.